Well, this week's market open could not have been easier for traders who trade the TBD system, and in this video I'm going to show you exactly why. We got a textbook false move week beginning that opens the week, which we expect every week. Sometimes they're easier to spot than others, and this week was perfect. So I'm going to show you how that played out, but then if you missed it, I'm also going to show you what to look for next. And we're going to have some cautions because whilst we're seeing a nice little move to the upside currently, there are some things we need to watch out for the rest of the sessions today and also later on into the week. So if you're new here, welcome. If you're returning, welcome back. I'm Annie and this is Trade Travel Chill. We are getting straight into the TA today, but before I do that, make sure you smash that like button, hit subscribe if you're not already subscribed so that you can be notified every time I upload a new video. Now, before I get into the TA, let's just quickly have a look at some news events that we've got going on this week because these news events are going to affect price action. So first of all, we have a bank holiday in Japan. Now this is showing as Tuesday, but I actually thought it was today. So I'm not sure if this one is incorrect or if it actually is tomorrow, but just keep an eye on that because when we have a bank holiday in one of the sessions, it can change the behavior of the other sessions for that day. So if Asia starts acting a little bit weird tomorrow, then it may be a signal for you to hold off any new trades tomorrow if you are new to the system and you don't quite understand how session behaviors change. But if you do know all of that, you can trade as normal. Now, the biggest news event of the week is going to be the CPI data that comes out on Wednesday. And being a Wednesday, it's around the middle of the week. It could cause a midweek reversal then from whatever way the trend begins at the start of this week. It's possible to reverse the trend around that news event if we don't get the news that we want. Another news event that might move markets this week is going to be the retail sales on Friday. The reason for that is because investors will use this data for a bit of a heads up on the US economic growth. So that could be a big market mover as well. Now, last time we had the PPI as well, that can be a market mover too, but last time we had it came out before CPI and we didn't really see much of a movement on that because we saw the market move after when CPI came out as well. So this time they're flipped the other way. We have to wait and see how they respond there, but it is a high news event week and we have to be aware of that. So when planning out the week using the TBD system, we're essentially looking at the news coming up for the week to get an idea of what we think might be the biggest market mover somewhere around midweek, and that may give us a hint that price may move in one direction into that high impact news event and we may see a reversal out of it. But of course, there's no guarantees on that. We have to wait until that day to see if that's what's actually going to happen. So as I said to you, this week started as textbook as the TBD system possibly can start. So I'm going to take you through exactly what that is now. Now, I did post this chart on my Twitter earlier today, giving a bit of a heads up what to look for when Asia was around about the time to end, I think it was. So if you're not following me on Twitter, be sure to do that. Make sure you find me using the link that's in the description of this video because there are a lot of fake accounts out there and I don't want you following the wrong one and getting DMs and asking to send you money and stuff like that. I will never do that. But I did show this chart here on Twitter this morning and I will now explain it in this video. So in case you're new to the TBD system, this is how it works. The weekend is basically what we call a weekend trap, where price essentially just goes sideways. It has low volume because market makers aren't generally around, and it's designed to keep you in a trapped move so that the price doesn't move enough into a take profit area, but it also doesn't reverse enough to stop you out of trades. And the goal here is to get retail traders to commit to trades over the weekend. Why? Because the market makers need retail commitment in order to move the market in the direction that they want to move it. So once we get closer to the end of the weekend, which ends on Sunday, 5 p.m. New York, what we tend to see is a false move made, which is what you can see right here. And the false move is designed to stop out the weekend traders. Now, usually it only stops out one side of the weekend traders, and then we move into our 3-day swing. But sometimes it can be a double-sided stop hunt where you'll see a move like this that shifts out of this consolidation range and then then you'll see it shoot back up the other way and it takes out the other side of the traders and it basically just wipes the board clean and we start all over again. So that can happen, and when it does, it's tricky. But this is what you need to know about how typical weeks open. Weekend consolidation, a false move to stop out or liquidate one side of traders who opened up positions and didn't take profit or didn't close their trades over the weekend. So when the price moves to the downside out of the box, it's stopping out long traders. And once you see that, you know that the weekend traders have been liquidated, and that's when you start to look for signs of a reversal. And so what we can see following that false move right there, we create this formation here called a W formation, where we move out and away from the range, then we come back to repeat the level, but we don't close below it or really anywhere near it. We will create a higher low. And that's what this is here. And the higher low eventually leads to the W formation. So that's what we have so far. And for traders who trade Asia, you could have got a long position off any of these candles here and you would currently still be long. Now, once Asia finishes, we need to have a look where the high and the low is, because they're called the initial high of the day and the initial low of the day. They both get set in the Asia session. And that is this white line right here. And once they're created, we then look to the following sessions to either break them or continue the trend. So we're right now in UK session as I'm filming this, and we can see that UK has only just broken above the initial high of the day. This isn't all that strong. I'd like to see a much stronger break if I'm to believe a trend is starting. But essentially what's happening really is that actually we did have a session behavioral shift today, because what you can see here is that Asia has run a trend to the upside, and that's not Asia's job. Asia's job is to consolidate and just set the range. And so far in UK, I mean, we're only a couple of hours in, but so far UK is consolidating. Like I said, consolidation is Asia's job. UK's job is to run a trend, and so far it's not running the trend. So there is a session behavior shift, and that might make it a little bit difficult to pick what US is going to do later today. But if this is going to be the start of our 3-day trend to the upside leading into CPI later this week, there's two scenarios that we need to see next. First of all, following this high, at some point, price needs to return to either EMAs or around 50% Asia level and create a higher low. And that might happen towards the end of UK. It might happen in US, one of those two sessions if we're lucky. If it does create a higher low anywhere in that range, that's going to be your best case scenario actually to get a long position. It's going to be the lowest area to get it. I do also like that this 50% Asia, which is the halfway range of the low and the high of the day, it's at 96,417, and it also lines up with this green vector, which shows that that's where the most volume came in. So if you're lucky enough to get a retracement anywhere in this kind of zone right here, around the 200 EMA to 50% Asia, that would be a good entry to go long, providing you got the final confirmation, which is bullish candlestick structures. And then you would expect that level 2 would be coming following that. So this would all end up being level 1. It's not a perfect level 1, but a retest will prove that it was level 1. Now, this is your best case scenario. We don't always get best case scenario, but for me personally, that's what I look for. I look for, if I'm going long, I'm looking for the lowest area for me to get a long position. I'm not looking to chase price. If it doesn't come back to where I want, I will just sit out and wait for the next best opportunity. I'm not really all that worried about always being in a trade. The second scenario that would confirm that this is going to continue an uptrend for the next couple of days at least would be consolidation, which is a lot harder. So because UK is consolidating now, we would basically continue to consolidate probably above the high of the day. It's around 97,300. So if we can actually, you know what? We could really continue to consolidate above the 50 EMA. Now, and I'm on the 15-minute time frame, by the way. So 50 EMA is my blue line. So if price consolidated in this whole box right here for the whole of UK, we may not get the pullback we want for a really good entry, and US might just shoot out to the upside. So that's a harder entry to get because, like I said, it's not going to be the cheapest price possible, but that would be the ideal scenario for me. If UK continued just to the upside from here, there's no entry because that means you're chasing price and you need to wait. Maybe US will give you a pullback. Maybe you won't get it till tomorrow. It is what it is. What can I say? So with all of this in mind, I can then go to the heat maps to see if there's any warnings about potential targets or potential pullback areas. And when I look at this, there's two zones above price that are warnings that could act either as a temporary resistance, which we'll know when we get there, or the reversal, because what we have to remember about today is that after the W formation is made, either session changeover, Asia to UK, which has already happened, so that's not relevant, or UK to US, and it can even be in one of the sessions tomorrow, this move to the upside could completely fail and reverse on you. So to get a heads up on whether or not that will happen, we look to these heat map orders here to see where are the short orders waiting in a large capacity that could potentially cause a reversal. And we have some warning bells around the $101,000 region currently. Now that's been sitting there for a while. I've been watching it all weekend. And the other one is up here at 105,000. Now currently the price is only 97,700. So if I zoom out on that, it will show that it is currently, both of those levels are currently quite high above price if you're a day trader. I mean, you could long into those short orders and it would be a huge risk to reward trade. Let me get rid of these notes and show you exactly what that would be. So if you were trading Asia and you got in on the second peak of this W, your stop loss would only need to be under the first peak of the W. And if you rode that up to the first short orders, it's a 5-to-1 risk to reward. Not bad for a few days work potentially. And if that ended up only causing a temporary retracement but maintain the structure, then you would assume that all of this is level 1. Let's just say we get our pullback maybe, and then we go to here, that could be level 2. Then we get a pullback and then we go to here, that could be level 3. And all of that is possible to happen before Wednesday. It's not a guarantee, of course. We need to see how strong the rejections are at this level. But if something like that were to happen, then you get to hold on to that trade for a 9.5-to-1 risk to reward. That's a huge trade to have in a few days' time. But in addition to high level short orders, you always have to pay attention to your key levels as well. So the high of the week would end up being a target too. So this is kind of best case scenario, but what's going to give you more confidence that something like that is actually going to play out is going to be once we have a confirmation of that higher low after the W, and we don't currently have it. So just a reminder, our two best scenarios for further upside is going to be a higher low somewhere around 50% Asia to this 50 EMA, or second best is going to be consolidation anywhere from where price is now to the 50 EMA. The final scenario, and it's not dependent on the price, it's on the movement, would be that towards the end of UK session, we get a extension to the high, and that extension gives us a bearish looking candle, and then we retrace from there, and then US starts and gives us a lower high. That would tell us that this one-day trend is over and we're going back down. That formation would be bearish, and if it doesn't happen over UK US, then you're fine to ride the trend, but you would still be looking for the same thing to happen US into Asia tomorrow. If it doesn't happen now, I would say we're okay for upside, at least until Wednesday. But this is what you have to watch at the beginning of the week at all session changeovers. And when I say the first candle to look bearish, this red candle right here, let me zoom in on it. This red candle right here with the really large wick to the top, that would be the exact type of candle that I would look for here towards the end of UK. That's where I would say, okay, now wait for the second side, because it's not a guarantee. If you see a candle like that, it's not a guarantee that we're going down. You need to wait for the follow through. And again, this price action is the perfect example. If you saw that candle and shorted without waiting for follow through, you would have ended up stopped out, because as you can see, we've gone higher than that now. So you always wait. If you see this first, it's a heads up. The trigger to act is the failure to repeat that level. If we don't get that that, we're fine to hold on to our trades. Now, in addition to that, many alts are looking very similar to this as well. If we have a look at Ethereum on the smaller time frame, same thing. With Ethereum last night, I was actually talking with the private community about this trade when the price was here and people were looking potentially to go long on ETH, and I had noticed this really high liquidation level that was right at the bottom of the weekend box, and it didn't make sense to me for price to be so close to it but not take it out. So that was a caution for me, and you know, as I woke up today, I saw that it did come and take that out. So these liquidation levels are now gone, but I just kept them on the chart to show you exactly how the liquidations work when the week opens and the market maker liquidates the weekend positions. Now, we have the same sort of issue with Ethereum in that the initial high of the day has been created at 2660, and we've repeated the level in UK, but we haven't yet broken it. It's exactly the same. Somewhere around about the 50% Asia level is where you're going to look for a higher low. And if you can get that higher low, then you would believe that we're going to continue to the upside for a little bit longer. But this one is trickier than Bitcoin because ideally, once the initial high or the initial low of the day is created, you want to see one of the next sessions break it. And UK hasn't broken it yet. But the positive is it's above the EMAs. So you give it time, give it a chance. But we're hoping that the UK extension that happens in the last hour of UK, we're hoping that actually breaks that to the upside if we're going to continue. Or the extension can come down first, give us the higher low, and then somewhere around the US Open, we start to see some strong moves to the upside then. That's what I would be looking for on ETH personally if I wanted to get into a new long position. Solana was really beautiful, and this was a trade that I updated in the community last night because the higher time frame was giving me the hint of a trade to take on the lower time frame. So we had this break, we had this big retest, we've held the 200 EMA on the daily time frame. All of that is pretty good. Also, a lot of leverage was absolutely decimated in altcoins this week. Bitcoin still has a lot of liquidity below price. So for me right now, any moves to the upside are short term. I'm cautiously optimistic, but I don't think they are the bottoms in kind of situations right now. I think that they are short term recoveries if we have any moves to the upside, because the liquidity for Bitcoin below price is huge. And as you know, if you've been watching my Twitter, I do have a 78K target for Bitcoin, a big flush out potentially coming, and I don't know when, but you know, the only thing that's going to make me think that's not going to happen is if Bitcoin can move back up into the 105 kind of range and start to break some highs from there. But from where it is now, a flush out is still really possible to come. And because all of the leverage, not all, but so much of the leverage was washed out on many alts. I went through about 30 altcoins last night, and the leverage levels below the price on alts was like, it was just non-existent. So it made sense to me that the market was going to open up bullish today, because we have to drive price up a little bit to get people back into altcoins so that we can get that leverage back on the table, so that if they actually do want to drop Bitcoin down to wipe out its leverage later on, the liquidity is there to do it to the altcoins as well. So that's why I'm saying be cautiously optimistic, but don't get carried away. This is not a buy the dip moment for me. I know I get hate comments when I say things like that, because there are still people who think epic alt season is coming and just keep buying dips, keep buying dips. I mean, there's no problem with just trading, taking a profit at peak formation highs and then taking a new trade at the next dip so that you're not left being a bag holder. I don't know what it's going to take to get people to understand that difference. But if you're dollar cost averaging all the way down on every new low, the more you do that, the more your average entry moves away and takes you even longer just to get back to break even. So it doesn't seem like the smartest strategy to me, but you do you, my friend. It's your money. So back to Solana, I was expecting this short-term sort of recovery here. And if we go down to the 4-hour time frame, I also had this here where we have this wedge formation, and that was leading me to tell the community to look for a higher low in this area here. And when we go down even further, it was actually on the 15-minute where I gave the warning for the entry based on what I had seen on the higher time frame, that we had our 3 drops into the week open here. And that led to the left side of the W. Asia created the right side of the W. And ever since then, we've been moving up, but we're in the same situation now where I don't really call this a break of the initial high of the day. Like I said, I like to see a strong break, then we come back for a retest. So similar situation, it's above EMAs, same as Bitcoin, may just consolidate and then hopefully US takes us up further. Or if we're lucky enough, it may pull back for a nice 50% Asia area entry. And then again, hopefully US does continue the trend. But for everything I'm mentioning to you, just keep an eye on the session changeovers for that weakness looking candle. That will give you the heads up that we're not getting any more upside. XRP was another one. Again, you can see these W formations very clearly, I hope. And this target, I think it was based off the 1 hour time frame. So we've come into that now, but look how it's starting to pull back. This is what I want to see happen on the others. But again, I want to see it hold somewhere around 50% Asia. 50% Asia is good for an entry if we get the bullish candlestick formations, but we may not come all the way back there. But in this case, it would be great because we do have a green vector candle around that area, a nice pullback, you know, by the end of UK. If US opens up bullish, we should get the second leg, which will then go to the next target, hopefully. So if you're looking for somewhere to take these trades on, check out Zoomex, because Zoomex is a non-KYC exchange and they have spot, they have derivatives depending on how you want to trade, but also it's one of those non-KYC exchanges that also has inverse perpetual, which means that you can use the actual coin that you want to trade as your collateral, meaning your profits get taken in that trade. So for example, if you were taking a Bitcoin trade, instead of taking your Bitcoin profits in USDT, which is not what you want to do if the price is bullish, you can take that trade using your Bitcoin, and when you collect your profits, you're collecting your profits in Bitcoin. So when you're bullish, you want to maximize the long positions as much as possible, and this is the way to do that. And there really isn't many, if any, non-KYC exchanges that have inverse perpetual. So I really like Zoomex for that. And if you use the exclusive link in the description of this video, you will also get 20% discount off your trading fees, and that definitely adds up over time. So check out Zoomex if you're looking for somewhere to trade on. And I also just quickly want to go over the Dixie because, well, Dixie and the stock market, there's something here. There is something here. Number one, S&P is looking kind of okay, right? It just looks like it's consolidating at resistance. But what I can see with the S&P, I'm not expecting it to come down now, to be honest with you, but I will tell you what I am watching for to change my mind. Now, I do think the S&P will probably break resistance and keep going for a little bit longer. The correction is coming, but I don't know if it's coming this week or in the next couple of days. But what I will be watching for, because I have those two hits to that resistance, I'll be watching to see if we get a third one. And if the third one rejects, then I would start to look for signs of a lower high from there. And that is what will tell me most likely this lower high would break an EMA, the 50 EMA, and then do something like that. That's what will tell me we need to be very, very careful. If the S&P comes down, crypto is not going to hold up. So I need to really watch this. Ideally, I want to see it break to the upside. This is going to be my warning bell if it doesn't. And the reason why I'm watching that is because of the VIX. So with the VIX right now, this is the volatility index for the S&P, and it's in 16.24 now, but if it's heads anywhere below this line here, which is 14.76, it got close last week on Friday. It like literally bounced right off it. But if we head down into this area whilst the S&P is at its resistance, that's basically a signal for a big explosive move to come. And that big explosive move could be a correction. So I don't personally think it's due yet, but the chart is telling me watch it anyway without having your own personal opinion. Just watch it anyway, because this is going to give you the heads up if we do enter into that zone. And finally, let's have a look at our dominances, because I do have a bit of an update here. This was 3 scenarios I put out in Discord for the opening of the week. If the Bitcoin dominance comes down, going to be great for your altcoins. If it rises, not going to be great for your altcoins. But best case scenario would be that we chop sideways. And so far today, that's the the scenario that we're getting. I noted here could be good for alts if Bitcoin price is also sideways or up, which is what it is currently. So if this keeps chopping, again, like I said, we might continue to see our upside into Wednesday, but we don't want to see this break the range to the upside for the sake of our altcoins. And then if we have a look at the others dominance, the H pattern has played out at this point in time. So as you can see here, I've got target 1 and target 2 from here, and price did come back here to target 1. So what we're looking for now, that would be considered an H pattern complete. So that means you then look for signs of continuation or reversal. It's not a one or the other. So what we need to see now is that this target 1 actually does hold as support and then start to move to the upside. If we get that, it's good for our alts for now. If we break down below this support, not good for our alts for now, okay? So what we really want to see, because essentially all it's doing is ranging, it's equal highs and equal lows right now. Don't want to get too excited about that, but we want to see this now break out, ideally break above the 50 EMA would be even better with some strength, and then give us a higher low after doing that, retest the EMA potentially, hold it. That's where we would start to think, okay, we're going to have continued upside. Our altcoins are okay for now.